For most of this year, XRP was written off. Flat charts. Dead headlines. A token that traders had stopped talking about. Then, in the span of 7 days, everything changed. XRP gained over 40% in a single week. Billions of dollars in trading volume poured in from Asia to the United States. And on trading floors from Seoul to New York, a question started spreading. How did nobody see this coming? This is not a story about luck. It is a story about a slow, quiet buildup of regulation, institutional money, and technology, all converging at once. And by the end of this video, you will understand exactly what happened, why it happened now, and what it might mean next. XRP is one of the oldest digital assets in existence, built by Ripple over a decade ago with a simple goal: make moving money across borders faster and cheaper than the traditional banking system. For years, it lived in the shadow of Bitcoin and Ethereum. It had loyal supporters, but it also had a legal cloud hanging over it, years of regulatory uncertainty that kept many institutions on the sidelines. That uncertainty is exactly why what happened in August 2026 matters so much. When an asset that has been held back by regulation suddenly gets a signal that the regulation is clearing, the market does not just adjust calmly. It reacts fast and it reacts hard. In this video, we are going to walk through the real sequence of events. The political meeting that changed sentiment. The whales that moved hundreds of millions of dollars while nobody was watching. The new partnerships that quietly expanded XRP into everyday payments. And the technology upgrades that gave institutions a reason to trust it again. By the end, you will have the full picture, not just the headline. To understand why this breakout felt so sudden, you need to understand how quiet the months before it actually were. For most of the year, XRP had been sliding. It was down roughly 45% since January, and down even more compared to where it stood a year earlier. Analysts described it as trapped, stuck below the psychologically important $1 level for weeks at a time. August itself had a reputation problem. Historically, it was the flattest month on XRP's entire calendar, and it had closed lower for 4 years in a row. Two of the biggest catalysts everyone was waiting for, a major regulatory vote and a Federal Reserve interest rate decision, had both been pushed back to September. In other words, almost everyone expected August to be a non-event. A month to wait through, not a month to watch closely. That expectation is exactly what made the next 2 weeks so dramatic. In the middle of August, something shifted in Washington. President Trump met with a group of crypto industry executives at the White House, pushing publicly for regulatory clarity around digital assets. At the center of that conversation was a piece of legislation known as the Clarity Act, a bill designed to finally define how digital assets like XRP are treated under U.S. law. For years, that lack of clarity had been one of the biggest weights on XRP's price. Institutions do not like ambiguity. Large funds and banks are cautious about holding or offering an asset when its legal status is still being argued over in court. Every delay, every unclear signal, kept serious money on the sidelines. The White House meeting did not pass any law. The vote itself was still scheduled for mid-September. But it sent a signal, and in financial markets, signals move faster than legislation. Traders read the meeting as a sign that regulatory resolution was finally close, and close enough to start positioning early. That single shift in sentiment became the spark. What came next was the fuel. Before the price chart showed anything unusual, the on-chain data already did. In the days surrounding that White House meeting, large holders, the wallets commonly referred to as whales, accumulated more than 300 million XRP in under 4 days. That is not casual buying. That is coordinated, high-conviction accumulation from participants who typically move before retail traders even notice. At the same time, derivatives markets began to shift. Open interest, which measures how much money is actively betting on XRP's price through futures and leveraged contracts, climbed sharply. On major exchanges, nearly 3 out of every 4 tracked accounts were positioned long, betting the price would rise. This kind of setup tells a story most casual investors never see. It shows that sophisticated players were already positioning for a move before the broader market caught on. By the time headlines started calling it a breakout, the early money had already been in the market for days. Before we go further, there is a detail that trips up a lot of people trying to understand XRP, and it is worth clearing up here. At the start of every month, Ripple releases a batch of XRP from an escrow system originally set up back in 2017. In early August, headlines circulated about Ripple releasing 1 billion XRP from escrow, and to someone unfamiliar with how this works, that can sound alarming, like a flood of new supply about to crash the market. Here is what most of those headlines leave out. Ripple did not simply release a billion tokens and walk away. It relocked 700 million of those tokens straight back into escrow, the same way it does almost every single month. The actual net new supply entering circulation was closer to 300 million tokens, a routine, predictable event that has repeated monthly for years. Understanding this detail matters because it tells you the price surge that followed was not driven by some surprise supply shock. It was driven by demand, real buying pressure entering the market, not a supply-side accident. While traders were watching charts, XRP was quietly expanding into places ordinary people actually use money. In the third week of August, XRP went live on BitPay's self-custody wallet, opening the door for everyday users in supported regions to buy, sell, swap, and spend XRP directly, all while keeping control of their own private keys. This is not a niche exchange feature. It is a step toward XRP functioning as something people can actually use for payments, not just something they trade and hold. At almost the same time, trading activity in South Korea exploded. XRP became the most actively traded asset on South Korean exchanges, with volume on the country's largest platform, Upbit, surging by more than 270% to over $1.8 billion in a single stretch. Asian retail markets have a long history of amplifying momentum once it starts. When Korean traders pile in at that scale, it tends to accelerate whatever move is already underway, and that is exactly the pattern that followed. Price momentum rarely lasts on hype alone. For institutions to take an asset seriously long-term, the underlying technology has to hold up under scrutiny, and this is where XRP quietly did some of its most important work. Over the summer, developers shipped a series of security reviews and bug fixes on the XRP Ledger, part of an ongoing effort to keep the network stable as more institutional activity flows through it. Alongside that came two significant upgrades. The first introduced native privacy features and what is called atomic transaction batching. In simple terms, this allows users to hide sensitive balances and transfer amounts from public view, while still allowing authorized parties like auditors or regulators to verify what they need to see. It uses advanced cryptographic techniques to strike a balance between privacy and accountability, something large financial institutions have been asking blockchain networks to solve for years. The second upgrade allows developers to group up to 8 separate operations into a single all-or-nothing transaction. This makes complex financial settlements, the kind banks and payment processors rely on, faster and less risky to execute on-chain. Separately, Ripple began backing a proposed institutional credit fund built on its stablecoin, pending activation of 2 additional Ledger amendments designed to support that kind of infrastructure. None of this made headlines the way a 40% price jump does. But it is arguably more important, because it is the kind of groundwork that turns a speculative asset into infrastructure that serious institutions are willing to build on. Let's put the actual numbers in front of you because this is where the story stops being abstract. By August 22, XRP had reached approximately $1.43, its highest level in a month, after gaining more than 14% in 24 hours and over 43% across the week. Its total market capitalization climbed to nearly $90 billion. Spot XRP exchange-traded funds, financial products that let traditional investors gain exposure to XRP through regular brokerage accounts, also saw a return of inflows, pulling in fresh capital after a stretch of weak demand. Even a major bank disclosed a small position tied to XRP exposure through an existing fund, a modest but symbolic sign that traditional finance was paying attention again. Broader market sentiment backed this up. An index that tracks overall crypto market mood had jumped to a reading of greed, a sharp rise from where it had been just weeks earlier. Bitcoin itself had climbed nearly 24% over the same 7-day stretch, suggesting this was not an XRP-only story. It was part of a broader wave of capital moving back into digital assets. Here is where a documentary has to do something most quick news clips will not: tell you the part of the story that complicates the excitement. Remember those long positions we talked about earlier, the ones showing nearly 3 out of 4 traders betting on further gains? That level of one-sided positioning is not purely a bullish signal. It is also a warning sign. When almost everyone is leaning the same direction, the market has very little room left to absorb a shock. If new buyers slow down even slightly, forced liquidations can trigger a cascade in the opposite direction. In fact, in the final days of this rally, the largest single liquidation event in a month took place. Nearly $17 million wiped out in one moment, and short sellers lost significantly more than long traders during the run, evidence that part of this rally was accelerated by traders being forced out of losing bets rather than pure new buying. This does not mean the rally was fake. The fundamentals we covered, regulatory momentum, institutional adoption, real technology upgrades, were genuine. But a rally built partly on leverage and crowded positioning behaves differently than one built purely on organic demand. It tends to move faster and it tends to be more fragile. Understanding both sides of that coin is what separates someone who understands markets from someone who only reacts to headlines. Step back from the day-to-day price swings for a moment, because the more interesting story here is not about whether XRP goes up or down next week. It is about what this entire sequence reveals. For years, one of the biggest obstacles for digital assets has been the gap between innovation and regulation. Technology moved fast. Rules moved slowly. That mismatch created exactly the kind of uncertainty that kept institutions cautious and kept prices suppressed, regardless of what the underlying network could actually do. What happened in August is a preview of what tends to occur when that gap starts closing. A political signal, even one that fell short of an actual law, was enough to unlock a wave of capital that had been sitting on the sidelines for years. Multiply that effect across an entire asset class, and you start to understand why so many people in this space watch legislative calendars as closely as they watch price charts. The real vote is still ahead, expected in mid-September, alongside a major decision from the Federal Reserve on interest rates. Both of those events carry the potential to either accelerate this momentum or slow it down sharply. Nothing here is settled. But for the first time in a long while, the direction of travel looks clearer than it has in years. So where does this leave things? In the near term, all eyes are on two dates. The Clarity Act vote, expected in mid-September, and the Federal Reserve's next interest rate decision the following day. Both have the power to either confirm this breakout as the start of something larger, or expose it as a sharp, short-lived move driven partly by leverage. Longer term, the more durable story is the one running quietly in the background. Real payment integrations, real institutional infrastructure, and real technological upgrades that are not tied to any single news cycle. Those developments do not disappear if the price pulls back next month. They compound over time. That is usually how meaningful shifts in any market actually happen. Not in a single dramatic headline, but in a series of quiet developments that eventually reach a tipping point, and then all at once, everyone is asking how they missed it. Nothing in this video is financial advice or a guarantee of future performance. Digital asset markets are volatile, and the same leverage that accelerated this rally can just as easily accelerate a decline. Anyone considering exposure to XRP or any other asset should do their own research and consider speaking with a licensed financial advisor. Let's bring it all together. XRP spent most of this year trapped in silence, written off by a market that had stopped paying attention. Then a political signal reopened the door to institutional confidence. Whales moved early and moved big. New payment partnerships pulled XRP closer to everyday use. And under the surface, real technological upgrades gave institutions a reason to trust the network again. Put together, those forces produced one of the sharpest weekly moves XRP has seen in years, a breakout most people never saw building because it was never built on a single dramatic event. It was built on a dozen quiet ones, all arriving at once. Whatever happens next in September's vote, in the Fed's decision, in the months that follow, the story of this breakout is a reminder that the biggest market moves rarely come out of nowhere. They come from patterns most people simply were not watching. If this breakdown helped you understand what really happened, consider subscribing for more stories like this one. Drop a comment with what you want covered next. And if you found this valuable, a like helps this channel keep bringing you the full story, not just the headline. Thanks for watching, and I will see you in the next one.